Hey, in today's episode, Paul and I are going to talk about having a shelter in economically uncertain times. So maybe it's the election cycle, whatever it may be, the inflation, the Fed, and everything they're doing to our money supply. There's just a lot of uncertainty out there, and a lot of people are holding tight. This episode, we dive into how infinite banking works in good times and bad times, high interest, low interest environments. It doesn't matter. The process of banking continues. Also, at the end of this episode, stay tuned and listen to how because I have access to capital during uncertain times, have an opportunity to earn a 289% ROI on an opportunity that's in front of me. So stay tuned. Enjoy. Hey, I'm Dave.
And I'm Paul.
And this is the Wealth Warehouse Podcast. All right, Paul, how you doing, buddy?
Good, man. What's going on?
All right, just another day. Summer's pretty much over. I guess by time this episode gets released, all the kids will be back in school. So
as of recording, we went back today.
Oh, really? Yeah. So
Yep.
You guys went back like prior to the last week of August. My kids will go back. Some will start, the last week of August. Some start right after Labor Day. So
Right on.
Yeah, it went fast as always, but we had, made some memories. Went to Colorado for a week. That was a lot of fun. Did some cool stuff. And yeah, now it's time to get back to a quiet house during the day. So maybe I can actually work out of my home office at some point.
Yeah, that sounds good.
Yeah. Yeah, man. Well, so we had I had a conversation with somebody recently who kind of went through the whole process, and at the 11th hour decided it wasn't for him. So that's fine. I'm always curious why somebody goes through the whole process and gets on board, and then at the end decides it's not for them. You've seen it too. It's just a fact of doing business where not everybody's going to go through with it. And I think you and I discussed that. What do you see as the biggest reason why somebody doesn't complete the process and of becoming their own banker?
Well, I think I think they're looking at it from the wrong angle. They don't really know what it is. There's a lack of understanding, a lack of education. In some cases, maybe they haven't read Nelson's book. Like we specifically require people to do that because it's like reading, it's the IBC Bible. It must be read, it must be understood, it must be embraced. And when that doesn't happen, it's very clear that, and you can tell, I guess, you can tell when, and we're going to go over it today, people's concerns or people's responses or their assumptions or their lack of understanding. You can tell that the work hasn't been done. And then you have the complete opposite, right, Dave? You have clients that don't contact us until they've read the book twice. We've experienced that several times, and that resulted in very good conversations and very good business and a very good client level of understanding. So, yeah, I just, some people can't see they're missing the forest for the trees, and it's just how it goes, and it's unfortunate because once you understand this concept, you will be asking us, how much premium can I pay?
Yeah,
I want to pay more. I want to expand my system, and that's just the fundamental difference.
right. And those people that really get it seem to come back for more policies pretty quickly. Either because one, they made the number one regret that people make is they started too small. They started below their capabilities.
Right.
And they realize, hey, I've actually got a lot more capability than I thought I did, or I was afraid to capitalize, or whatever it may be. Or two, they come back because they found money in other places. They decided,
Sure.
Hey, I was doing the 529 plans for the kids, and
Love those.
Okay. Yeah. Yeah. So I decided to stop doing that. That's, $2,000 a month now I freed up. Or I was putting money in different buckets, right? And then I realized, well, there's only one pool of capital. So I might as well consolidate, put it in the best, safest place possible. And then from there, I can spread it out however I want. Um,
Yeah, and we were talking before we hit record about, there's a lot of, we work with a lot of people that are professionals and they're good at what they do and whatever it is. They might be an attorney, they might be a doctor, a nurse, a truck driver, whatever it is, and they're good at that thing. And they need our help to do this thing, to understand the world of banking, the world of finance. And what I always want to reiterate, and I've said this many times on this podcast, and so have you, is that uh, it doesn't matter what you're going to go do. If you're not in control of the banking function, you are missing out, right? So just keep that in mind. I mean, the book is becoming your own banker, right? It's a process to do this. It's a worthwhile process. It's a long range thinking process. It's a generational process. And these are all things that you just need to remind yourself of, that it's not an investment. It's not compared to this or that. It's not an and or that decision. You can do whatever it is you want to go do as far as your financial strategy, whether that's single family, fix and flip, buy and hold, whatever. Stock market
Stock
stuff.
market investing, right?
Yeah, all of it. You could do both, and you should be putting, it's just the sequence of our money is going to be different. And I can't reiterate that enough. I'm going to say it probably in every episode from this point forward because it bears repeating. We are doing everything else everyone else is doing. We're just doing it in a different sequence.
Yep.
So, anyway.
No, I like the point you make about becoming your own banker. It's not become your own banker. It's becoming. It's a process. It's ongoing. Just like Nelson said, and you can bet Nelson titled that intentionally because of the arrival syndrome. You never arrive. There's always something more to learn, and there's always a way to continue to become a banker. So it's a,
Correct.
it it's very much a verb that never stops. It's an action.
Yeah,
So
and it's kind of a phased operation, right? And he demonstrates that in the book. Hey, let's try to create a system where we can finance a vehicle and then maybe a second vehicle, right? And then maybe we can finance other things. And he has multiple examples of the book, but it's going to take the average person 20 years to do this, right? To
mhm.
meet his own family's or her needs, right? For their needs and of their family. And then I'd like to go meet other people's needs. And of course we've kind of done things simultaneously, trying to meet some of our own needs and meet other people's needs as well through private lending and other ventures and stuff. But um, yes, it is a process, no question.
Yep. So, let's
So that
talk
was a
about the
long answer, but
that was a
lack of
long answer.
understanding.
I forgot we
Yeah,
were still on the original question I asked. So
yeah.
moving
It's
on.
this lack of it's just lack
It's
of
lack of understanding the
education,
problem. Yeah.
rethinking
Which
your thinking. You have to
right.
have the ability to do that.
Just like we interviewed Barry Dyke recently, who does a phenomenal job of laying out the problem. And if you want to know the problem, read those books
Yep,
because, yeah, that will uncover the problem and really open your eyes. Because if you don't know the problem, the solution doesn't matter.
that's right.
But right now, there's a lot of problems people are encountering. Uh, Economic uncertain times. That's kind of the theme. I think a lot of people are holding on to their money right now. And oh, guess what? You mean capital is important? You see how important it is to people, how important cash is to people during these uncertain economic times. It seems to happen every 4 years. Some might call it the election cycle, where you have no idea what's going to happen a couple months from now. I mean, everybody has their hopes one way or another, but nobody really knows. So therefore, people are hoarding their cash. They hold on to it because they don't want to make any decisions right now, because they don't want to make the wrong decision.
Yeah, I think we've heard anecdotally and on television that a guy like Warren Buffett is sitting on a ton of cash right now, and
Yeah, and what is
relatively, yeah,
yeah, what is Warren Buffett? I mean, his actions. I think we got into it with Barry. Like, oh, Warren Buffett sold what, billions of stock, cashed out, and then what happened pretty quickly after that? A giant stock market crash.
yep. Yeah, they
like the
know what's
biggest
going on.
crash in the Dow's history.
Yeah.
But guess what? It already rebounded. So what happened during that crash when all these people started, oh my God, I gotta sell. I gotta pull my money out. Um, no, there's no such thing as a market crash. There's market panic
Right.
where people decide, oh, I gotta pull my money out. You're selling low. Well, guess what? People who were sitting with cash did. What do you think Warren Buffett did? Had one of his shell companies buy up more stock when the stock dipped.
Yep.
So that's what people
Huge.
with capital do. You have the opportunity to to buy up that dip because you know if it falls that fast, it's going to come back. I mean, the stock market has never crashed and stayed at that bottom number. No, that's the opportunity. That's when people make, that's when wealthy get wealthier, the rich get richer, is when that
Yep.
happens.
You have to be ready to strike.
Yeah.
And and this goes for anything, whether you're creating your own opportunity, and you know, our listeners that they know I'm in the process of building a home, our quote forever home. Uh, and I was talking to some clients of mine last night that are about to enter the process. They're in underwriting for their construction loan, and I was like, and they're already good financially. They hoard a lot of cash, and I was just telling them, I was like, do not make the mistake of going to pay off this thing or pay off that thing. Stay as liquid as you can because you're going to need it. And I'm in this Facebook group, Dave, for people that are building their own homes or whatever, or having their house built. And there are so many posts of people running out of cash.
Yeah.
Yep, they've exceeded their construction loan or maxed it out already. They can't get more from the bank. Of course, banks don't like construction loans. And now they're out of cash. And they're like, what do I do? And I'm just like, oh my goodness.
So
You
what
know,
would you say? This is just because I think in a few years I'm probably going to be building a house too. I'm not excited about it, but my wife is. Um, what would you say is a good estimate to have in reserves above and beyond what you think you're going to spend? Like 25%? Like expect to go 25% over?
at least,
Yeah.
at least.
That's why I'm saying, you know what? I might add 50%. I'll say our budget's here, but secretly maybe it'll
Yep.
be 50% higher because I know it's going to go over.
Yeah, you can easily go over. Like our cabinet estimate was, I don't know, 25% off, 30%
Yeah.
off.
Yeah. Which is
Uh,
significant. Um, depending on the
yeah,
dollar
you're.
amount, that becomes
I don't
significant.
want to throw out the dollar amount on what the
Yeah.
cabinets are, but
Yeah.
there's a lot of them. There's a lot of cabinets.
Yeah. I can
But
imagine.
anyway, the whole point is, um, being in a heavy cash position puts you in a position of strength. We've talked about a lot on this podcast. It just gives you options, gives you flexibility, and you're ready to strike for whatever opportunity comes around the corner, right?
Yeah.
Um, or in my case, you know, a huge reserve for a construction build.
Yeah. There's a reason the healthiest companies out there have big cash reserves.
Yeah. So
So,
right. So the the life insurance, the whole life insurance companies that we write business with, one in particular has a you know, more than, I think, more than double the regulatory requirement of, capital asset ratio, right, of like 13%, which is phenomenal. The stock companies aren't even close to that. They're like 3 or 4% or something. So
yeah. Yeah.
anyway,
Well, so let's go back to somebody I recently talked to,
yeah,
kind of went through the process. And, this is somebody who he funds. Well, let me tell you what he said at the end of the process. He said, hey, during this economic uncertainty, I'm hesitant to put money into something, into life insurance. This is the same person who spends the first 4 months of a calendar year maxing his 401k. So he maxes that out, 30% of his paycheck going to a 401k, January, February, March, April, until it's max and he can no longer add anything else to it. He gets phased out based on his income or whatever it may be. Uh, that doesn't concern him. Economic uncertainty doesn't concern him enough to not put as much money as possible into a 401k, but he doesn't want to put any money into something that's guaranteed, that creates certainty, that has liquid capital available, that you have contractual access to, that can grow and access to grow tax free, that creates a gigantic death benefit should something happen to you, so your family's taken care of. No, that's too risky for some reason. That's just an evidence of somebody not understanding the problem. What do you not see
Yeah.
here?
Yeah. So it sounds like he has a fear of not having money
No, if he had a fear of not
available.
having money, why would he be putting it all away to something, into some place where he can't touch it?
Wow, you walked right into that one.
Yeah, right.
Right. So
Yeah, I
that's the
don't
question I
want to
would ask
be.
him, I
Yeah,
guess, is like, if
right.
you're afraid about the uncertainty, why are you putting all, it's okay to put some in the airline. I don't know what airline it is, but we'll put the money there for you, let's say. Um, why would you put more than that in that taxable bucket, assuming it's not like a Roth 401k or
Well, you
something.
can only put so much in a Roth anyway, right?
Well, Roth IRA, Roth 401k, I think has different limits, but I don't know if there's a lot of those out there. We have it in the military and the government, but
Right.
aside from that, if he's afraid of uncertainty, it's, to me, the logical thing to do would be to put more money under my own control in a place where it's never going to lose value. I'm protecting my family and all these things. So,
And to
um,
partner with somebody who provides guarantees on your capital, as opposed to giving it to somebody who creates zero guarantees for you. Like Barry said in the last episode, a toaster from Walmart has more guarantees than what you're getting in your
right.
401k.
Yeah, right. Like, what is the economic value of certainty to this person? I would ask, I guess.
Yeah.
Um, you know, for us, it has tremendous value. Um, and and gosh, being well capitalized, just like we just talked about the last few minutes, you're going to be well positioned to go do something super productive. Or maybe you're just going to weather a storm. Maybe you lose your job. I don't know, but you're going to be able to weather that storm. Kind of like you've talked about, Dave, when you had multiple career changes, and you were able to do these things and make these decisions because you had adequate capital to run your household for an extended period of time, which allowed you to be, here with me now, recording our 136th, 35th, 35th,
Yeah.
35th, 135th episode, right? Without
Right.
missing a week.
If I had put all my money into the company 401k, then I would, one, not have had the confidence to leave that job and venture out on my own, because I wouldn't have access to any of that cash unless I wanted to take a penalty. Of course, you have access to it if you want to pay a 10% penalty plus taxes. You have, sure, you can access it. Um, but mentally, I wouldn't have access to that because I'm not going to take that penalty and pay those taxes. Um, but not only that, but I would have had the golden handcuffs, because I would have been such a believer in that 401k that, oh, this is my retirement. I have to keep funding this. If I go out on my own, I'm not going to get a match from anybody. I'm not going to be able to fund my retirement. And I might still be there making, a whole lot less money than I can make on my own. And
Yeah,
and doing
it's
something I didn't really enjoy doing, for the next 30 years.
people treat the 401k as like this kind of like sacred cow, you know?
Yeah.
And I like our friend Ryan's take on it. He's like, the in his realm, they're putting the money in there for you anyway. Don't put any more. Put that extra money you have over here. It makes Why wouldn't you
Yeah.
put more money where you can get at it? More of your own money. Like, it just yeah. I don't get it. I mean, again, I was an easy client, so
You were.
uh,
But, I go back to this guy and his situation, and I'm thinking, man, this recent market dip, uh, what a great opportunity if you had access to capital in your policies. Grab a big giant loan, go throw it at the market, wait for it to rebound. If you have that much confidence in the market to be maxing it out and putting 30% of your paycheck in it for the first 4 months of the year,
right.
then you should have enough confidence to seize on it when it's at a dip, and and buy low so you can presumably sell high someday.
I wonder, has he considered the ginormous tax bill he's going to have when he starts taking that money as income someday at age 65 or 70 or whenever.
Wait, are you talking
Uh,
about compound taxes? So
yeah.
paying taxes on the harvest instead of the seed. So everybody thinks they're getting the tax savings right now.
Now they're getting a tax deferral.
You're getting a
Words
tax
matter.
deferral. Yep,
Yeah.
words matter. Just like when people say, "Oh, life insurance grows tax free." No, it doesn't. It grows tax
It's tax
deferred.
deferred.
You can access it tax free,
Access
but
it tax
don't
free.
lie, don't deceive. Um,
There's plenty of that out there. It's
there's
super
plenty.
annoying.
Yeah, there's plenty you can get. All the noise, but yeah, no, you're compounding your taxes. It's going to be a uh, quite the harvest for Uncle Sam when that day comes and you start taking it out. So something to keep in mind that, most people, if they're 30, 35 years old, they're thinking a couple years in the future. They're not thinking 30 years in the future.
Yeah, they see, oh, I got to reduce my taxable income by $20,000.
So I got to go buy a
Wee.
new boat or put a down payment on a new boat with that amount, right?
Yeah. Oh my
Yeah.
God. Well, I don't know. Yeah,
So,
I guess.
but bottom line, infinite banking works during good economic times. It works during bad economic times because during both times, the process of banking continues. The process of banking never, ever ends, no matter what.
Yeah, maybe I don't know if he'll listen to this episode, if you'll send it directly to him, but I would tell this person, and this could be any person, but particularly if you're worried about economic uncertainty, whether it's employment or the stock market or whatever, this is the asset class you should be seeking out to put more capital in, right? That's what you should be doing. It's a haven for uncertainty.
Right. And do you think these are going to be the only uncertain times? Wait another 4 years. I'm sure it's going to be uncertain at that point too. I'm sure.
I think it's
Yeah.
I was just going to say when is it ever certain? I mean, it seems like
Yeah.
2008 aside from Barry Dyke and that the guy from the movie with the one eye there,
Michael
that Chris,
Bur-
um
Berber or something like
yeah,
that. Yeah.
yeah, whatever his name is, that Christian Bale played.
Yeah.
It caught most people uh by complete surprise,
Right.
including the Federal Reserve. Oh, the housing market is strong and blah 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 and all this crap, and all the rating agencies, they gotta love
Yep.
them. Uh, when is it ever certain? It's never certain.
Right.
Like I have
Nothing is.
$0 in the stock market, and that's just me, and that's just how we roll. But I've got other things. I've got real estate holdings and some other stuff. But it's never certain. Nothing's ever certain. I
Yeah.
like the certainty, Dave. And every year we're going to be 45. You are 45, I guess. I'm going to be 45 at the end of the year. The older I get, the more certainty and guarantees I seek.
Yeah. And the better the opportunity has to be for me to participate.
Yeah, to even get
So
me interested, it
to get
needs
me
to be
interested. And, I'm not interested in giant returns. I'm interested first and foremost in, is my money protected?
return. Right.
Return of capital.
That's right.
And then is it worth the projected return I can get? Is that worth putting my money there versus waiting for another opportunity or seeking another opportunity where I can put my money somewhere safe as well and get a better return? So
Yeah, not
when you
everything's
have
an
that,
opportunity, is it?
no, not everything's an opportunity. I'd much rather miss a good opportunity than take a bad opportunity.
Same.
So I'm very, very picky and choosy these days. I mean, I was encouraged actually because you and I recently, in the last couple of years, participated in something that didn't work out, and we kind of went against um, our own rules.
Our own rules.
Our own rules. We broke our own rules, and
Yeah.
they're principles for a reason. I guess they were preferences at that time. Now they're
Now they're
principles because
principles.
we learned them firsthand. But I was encouraged. I was listening to a podcast, Ed Milet. Do you know him?
Mm-mm.
I'm a big Ed Milet fan as of late. I just started to listen to his podcast. I just like the guy. I like the way he's like a self-development guy, but also, he's worth like $800 million. He's a, entrepreneur, all this stuff. But he was talking about just recently how he got cheated out of a whole lot of money. And he's a money guy. He knows what he's doing. So it could happen to any
Right.
of us.
Sure.
But but that's why, yeah, the return of capital and understanding what I'm doing and getting in with the right people. But because I have this capital available right now, I've got I've got several opportunities in front of me. And right now it's just a choice between one or the other. One I'm looking at, I actually did the calculation here, Paul. This is a lot of fun. And I'll go ahead and share numbers with people. Um, what I After doing the calculation, it's coming out to about a 19.5% annual return on my money. And
Very good.
it's very secure. You know, I'm very highly confident in my return of capital. Um, and 19.5% sounds pretty good. But how does 289% sound? Does that sound better?
Yeah, almost as good as the banks.
Almost as it's almost like that's bank returns.
Yeah.
So let me
You'd
show you
have to
how
add
I'm,
another zero.
yeah, probably. Well, infinite because they're not using their own money.
That's right.
So there you
They're
go.
using,
Yeah, they're using credit and your money. So I'll give you the skinny here, um, using real numbers. Uh, this this opportunity requires $400,000. Whether I would do that by myself or I would do that by bringing in a couple other people who want to be a part of that with me, and we all kind of do whatever we can to get to that number. This is what it looks like after the end of this opportunity, and it's actually a 16-month deal, and then it can roll into something else. But at the end of 16 months, on 400,000, I made $103,840 in profit. Not bad for 16
yep.
months, right? So that gets you that 19.5% annual when you do the numbers. But then if I take what it costs me to do that deal, because return on investment is profit minus cost divided by cost. So my profit is $103,840. The cost of that investment is the interest I would have to pay to the insurance company to borrow $400,000 of their money, because my money stays in the policy. I'm not taking
Yep.
my own money out. And guess what? This doesn't even include the dividends
The
and the
dividend you'll
growth on
get
my
from the
cash
company.
value. Yeah.
Yep.
While I'm using their money to do this. So I
So it's
assumed
even better.
it's even better than this, but I don't know how to calculate that. I'm not that smart. Um, I'm
Well,
just going to,
you don't know what your good dividend's going to look like either.
you don't, you have a projection of, you have an
You're
idea of what
pretty
the dividend will
close,
be,
but
but,
mhm.
still, maybe after the fact, I can figure out exactly what the return was, but I'm pretty happy with 289%. So how I got that was, I assumed my $400,000 was going to cost me 5%. And I also assumed that I won't make any loan repayments towards that 400,000. So the interest is just going to accrue. Now that's not going to be the case. So my return is going to be even better because at the end of every month, whatever I have remaining that I don't need to spend on a living expense, I put it back towards any outstanding loans
Right.
because I want to cut down my outstanding balance to reduce the interest that I'm accruing. But let's assume 16 months, I didn't make any payments back towards the principal. So the interest that accrued has been $26,666. So I take 103,840 minus 26,666, and then I divide that number by 26,666 because that's the only cost I incurred. I paid $26,000 out of pocket to earn 103,000 in 16 months. That's a 289% ROI. Would you put $26,000 into something where you get 103,000 back 16 months later?
I would not stop doing that.
These are the kind of opportunities that are that that we attract today, that are available to those of us who are well capitalized. And I'm not saying you got to have $400,000 of cash value to do that. There's opportunities for $5,000 of cash value that you can
Sure.
participate in that are very safe, because we've spent years in circles, really narrowing down, really tightening that circle of where do I want to put my money for opportunities? Because there's
Right.
so many different places. But after years and years of doing this and focusing on it, I've really found, uh, the right path for me, the blueprint, so that I don't have to worry about losing my money again.
Right. No, that's great. And like you said, the process of becoming your own banker can result or will result in your becoming a wiser investor, right? And again, regardless of what you're doing, there's some friction there. Do I really want to do this policy loan to go do this thing? I'm really going to be diligent in looking at it. And of course, that comes with experience and maybe getting burnt once or twice, or in your case, like 80 times.
Your
Uh,
case too. I think we both introduced each other to opportunities where we got burned. Yeah.
uh, so yeah, it's just, no, it's phenomenal.
Yeah. So, I mean, that's why we store our capital in whole life insurance policies. That's why we don't participate in the volatility of these economic times. Our capital's not at the whims of maybe one or two big market makers. Elon Musk can post something on X and the market is affected immediately.
Dogecoin.
Yeah. Tom Brady can say something and all of a sudden all these people put money in and then, billions are lost and it's a lot of his fault. But
Hashtag
do you think,
FTX.
yeah, do you think he's ever even considered trying to repay anybody anything? I mean, he got paid like 30, I heard he got paid like $36 million to do that Netflix roast where he just sat there and got roasted. 36 million bucks. You think any of
Wow.
that went to anybody who he screwed out of money? No,
No.
no chance.
Right.
So there you go. If you're taking your advice from some NFL quarterback on what to invest in, what are you thinking? Or some rapper or some boxer who probably can't do
It's
basic division.
that whole FTX thing is it's very sad, but it's just folks, this stuff just keeps on happening,
Yeah.
right? 2008 it was something else. This time it was this. Next time it's going to be something else. Like it's just again, the problem is wide, the problem is simple. Put your money where you can control it. If it's too good to be true, it probably is.
Yeah. I mean, that's a solution. The solution is put your money where you can control it. And then you can be patient. I mean, the times I've lost money is because I had money sitting somewhere besides my policies. There was no friction between me and that money. And I said, well, I got no more policies I can put it into. Well, instead of opening a new policy and putting it in there, I was like, let me just put it over here and take some risk with this money. And then poof, it's gone. It's like this little, I had a buddy send me a clip from South Park where one of the boys goes to a bank and he's like,
Oh
I want
yeah,
to
yeah, I've
deposit
seen that.
$100.
Yeah.
And
You
he's like,
said that to
oh,
me as
great.
well. Yeah.
We'll put it in this money market account that trades foreign currencies and it's gone.
Yeah, it's
He's
gone.
like, what? It's gone. So yeah,
Yeah.
there's better things to do with your money. So capitalize yourself and seek opportunities or just sit back and wait for them because opportunities will show up for sure.
Opportunity abounds for the well capitalized.
Yep.
Like Ryan
Absolutely.
puts it like that. It's a very good way to put it. And
Yeah.
it's true.
Yep. Well, all right, everybody. I
But
hope what?
parting shot, sorry.
Yeah.
Getting back to the original topic of just uncertain times. Again, just to reiterate, this is where you go. If you can't see it, there's a lack of education. Read Nelson's book. Read it twice if you have to. Listen to the podcast. Educate yourself. And then take action. Like, my goodness.
In in uncertain times, what are you seeking? You're seeking
Certainty.
certainty. Where can you get certainty right now with your money? Well, we have 135 episodes that'll tell you how. There you go.
There you go. A little long today.
Yeah, a little long. That's all right. Uh, maybe hopefully everybody's sitting in traffic, their drive to work's a little longer so they can actually listen. Or listen to it on 1.25 speed. Paul talks faster.
Right.
So yeah, and I talk really fast probably. So, all right, everybody. Hey, enjoy. Have a great week. Until next week, control your capital.
Or somebody else will. Hey, thanks for listening, everybody. If you'd like to have a conversation with us to see how you can become your own banker, or if you have any questions or topics you'd like us to tackle in a future episode, please send us an email to davidandpaul@theibcguys.com.
And subscribe and leave us a review if you're on Apple. Follow and leave us a 5-star review if you're on Spotify. And please share this with your friends. We'll see you next week.